That's something you can't get out of, let's say, 401k, an IRA, a CD, a government bond. You don't get the life insurance because death and taxes, right? Those are two things we're assured of. We're trying to deal with both.
Like you said, someone working at Apple, I'm pretty sure they're making a decent wage, especially living in the Bay Area. And for them to literally tell you that they were going to quit their job if anything was to happen to their wife, that tells you the value of a stay-at-home mom. Even though they may be just staying at home on paper, not receiving income, how much money are they going to be saving you by taking care of the household, making sure everything's clean, cooked, kids are where they need to be? And in that situation, they had a disabled daughter, and if something does happen to the wife, what happens to the daughter when the dad's at work? You're gonna have to get like in-home care or send her off
It's
to like a daycare daily, and that's a
some
bill in itself.
in a business, this would be called a key man policy. So if you have a right hand man, woman in your company, and if something happened to them and it would totally disrupt your business organization, you would take out a life insurance policy to help protect your business. This is the
Exactly.
same thing you want to do at home. You have a key family partner policy. I was thinking about the term leverage. You're familiar with leverage, right? Most people use leverage to buy a bigger home than they can afford on their own. So they get a mortgage, right?
Yep.
They borrow a loan, secure the mortgage loan against the value of the house.
Hmm.
When I want to talk about, go back to, you said, when I got into this life insurance business, I was introduced to something called Kaizen, which
Gotcha.
was premium financed life insurance, and probably something most people have not heard of. And what this
Yep.
means is I borrowed money from the bank to fund my life insurance policy. And the bank was happy to do this. They had a guarantee because they had my death benefit, and they also had cash value that they could secure in that policy.
They had the death benefit if anything was to happen to you,
Yep.
and then they also had the cash value that was growing in that policy that they were the ones to actually front the money, meaning if anything was to happen either to you or to the deal, there was no risk on their end that they were
Yeah, they had no
taking.
risk. And so
Yep.
when I started looking at with one of my fellow engineers here, who used to work at Taiwan Semiconductor, he showed me how I could do the same kind of plan, but without all the handcuffs. So this premium finance plan that I was doing had a lot of handcuffs to it. I had to put in this case, $100,000 a year for 5 years. The bank was matching that, and then for the next 5 years, the bank took my match and their match together. So it funded it for 10 years, couldn't touch it for 15 total. So it became this really locked up plan. What you and I have discovered, we're premium financing our own policies by putting all of our expense money in and borrowing it back out. The loan, instead of from the bank, is from the life insurance company.
Yep.
And so we're using leverage to buy more life insurance than we can afford and to accumulate cash value for the future that can be accessed tax free.